I mean, on the latter, I think big tech has been overvalued, and there were folks out this morning saying that by most measures, we're seeing valuation stretches that we've not seen since 1999 and 2000, and clearly due for a pullback. I think about a month ago, I said we had 5% upside and 10 to 15% downside in the market. I think it's not just that factor. I do think that the high frequency data means something. And when you think, Kelly, also going into the fall and winter, when some businesses that have been able to recover a bit, hospitality businesses, restaurants and the like, particularly in areas where it's going to get cold, are going to have to start, kind of shutting down again, at least somewhat relative to where they've been. The data will look worse going forward. And so I think the market's pricing that in. Yes, manufacturing is doing better. Some of that could be predicated on China's rebound more than our own. And then ultimately, I do think without a vaccine, without a therapeutic and concerns about another wave, this market's got, some choppiness still ahead of it. And, just to make things a little more fun, we've got an election in less than, a couple months.
Right. Liz Ann, same question to you. How do you kind of tie everything together?
Yeah, I mean, there clearly was a valuation excess, and you were seeing it in speculation as well, certainly with what was going on in the options market recently, having options trading volume larger than the actual underlying shares. So there were lots of pockets of speculative excess, and I think we're seeing a bit of that rotation. It doesn't necessarily square on a day-to-day basis with what we're seeing in the economy. I agree with Ron that I think we're going to see fits and starts, and that past are the days where the law of small numbers worked in favor of these huge percentage increases off the bottom, whether in metrics like retail sales or even payroll growth. And I think now we're at a point in the cycle, particularly absent any additional fiscal stimulus, given what we've seen in the labor market of declining temporary job losses, but sadly rising permanent job losses, and the impact that that has on the psyche of consumers and small businesses. I think there is some risk in the economy, certainly, but also that this rotation is not yet finished.